Hey, Arthur Hill here with TrendInvestorPro.com. I'd like to welcome you to Next Level Charting. Remember, you can watch Next Level Charting every Thursday at noon Eastern Time, and you can also watch it on our YouTube channel. And if you like this video, please give us a thumbs up. So today I want to introduce you to 5 breadth indicators you can use to help time the market. AD% for a breadth thrust, AD volume percent for a volume thrust, high-low percent, strong uptrends versus strong downtrends, percent above 200-day EMA, and percent above 50-day EMA. So the first indicator we're going to focus on is advanced decline percent, and that measures the degree of participation. You can see in the second indicator window we have advances in green, declines in red. And if you get 450 advancers, that shows a high degree of upside participation. That is very bullish. That means 90% of stocks in the S&P 500 advance, because we're calculating advanced decline percent for the S&P 500. If you get 450 decliners, that means 90% of stocks in the S&P 500 decline. That is broad downside participation, and that is bearish. So to get 80%, the next step is to get net advances. And that's when you subtract the number of declines from the number of advances. So you can see in this example, we had 100 declines and we had 398 advances. So you would have a net of plus 298. So for example, if you had, say, 450 advancers and 50 decliners, as I'm showing up here, then you would have 400 net advances. And you can see here that when you divide that by 500, the number of stocks in the index, you get plus 80%. So before we get to 80%, you can see net advances. When they get above plus 400, that shows a lot of upside participation. And when they get below minus 400, that shows a lot of downside participation. Now, the reason we use AD% is because it normalizes the indicator. You can't just use net advances because there are 600 stocks in the S&P small cap 600. There are 100 stocks in the NASDAQ 100. So you need to divide by the total number of stocks to get a percentage, which is the percentage of net advances basically. And that is 80%. And so you can see here that we had 3 days where we moved below minus 80%. And that basically kick-started this decline that led to the start of the bear market. We can see a couple of, actually 4 plus 80% days in March, but if you look to the downside, you can see more days when 80% was below minus 80%. So clearly a lot more selling pressure than buying pressure. So how do we get a breadth thrust signal? So the next indicator is AD volume percent. AD percent measures number of advances and declines. An advance is +1, a decline is -1, regardless of market cap or volume. But AD volume percent puts volume into the equation. So that means the higher the volume, the more influence that stock has on the indicator, and that favors large caps. And so you take the volume of advancing stocks, you subtract it from the volume of declining stocks, and you divide it by the total volume in the S&P 500. And you can see that we had a number of days where we got above plus 80%, 4 to be precise, but look at all those days below minus 80%. That shows a lot of strong volume, a lot of big volume in the declining stocks, in the big stocks as well, and that is a bearish signal. We get the same signals for the volume thrust. If you get below minus 30%, that's bearish. You get above plus 30%, that's bullish like we did in September. And then here in February, we got below, late February, below minus 30% for a bearish volume thrust. So now we move to high-low percent. Now this one is not going to trigger as often as the first two because it is based on 52-week highs and 52-week lows. Now, as we saw here in the last 3 weeks, we went very fast from a 52-week high to a 52-week low in the S&P 500, and that was reflected also in stocks. But basically, the high-low percent indicator is the number of new highs, which you see in green, less the number of new lows, which is red. And then we normalize that indicator by dividing it by the number of stocks in the index, the S&P 500 in this case. So you can see here we had 200 new lows and only 7 new highs. So high-low percent would have been at minus 193. That's a lot of net new highs, if you will. And then when we normalize that by dividing, we get it in percentage terms. That was minus 38.6%. So I set my thresholds at plus 10% and minus 10%. And you can see this indicator was bullish throughout the year. It got above plus 10% on a regular basis, but then in late February, it moved below minus 10%. And that told you that new lows were expanding. And if a stock hits a new low, that means it is in a strong downtrend. If you're hitting a 52-week low, all right, that is significant. And when we got to this, below around minus 20% actually on February 28th, it was there, then that's like 20% of stocks in the S&P 500 are hitting new lows. That is not a healthy market, and that tells you that something is not right, or we're moving into bear mode. So if you want to search and find some more symbols related to these breadth indicators, you can go to the top right of any web page here, and I'm just going to search for advanced decline percent, because those 3 terms are in the breadth indicator. I've got support articles here, but if you click that drop down and select symbols, then you will see all the symbols that have advanced decline percent. And you can see they begin with the index that is used, or the sector in this case. This is consumer discretionary advanced decline percent XLY ADP, but you can substitute XLY for XLK and so on. Whole bunch of symbols there for you to create a lot of breadth indicators. And just a heads up, I have got a chart list with 106 charts and a whole bunch of breadth indicators. They are organized and grouped. It's in a top-down format. We've got indexes and sectors, and there are a lot of all these indicators and charts that I'm showing you now are in this list. And I'm going to release this list on trendinvestorpro.com this weekend. So keep an eye out for this weekend's Chart Watchers article for details. And of course, if you're not on the Chart Watchers newsletter email list, you can scroll to the bottom of any web page here, and there is a box to enter your email and sign up. So the 5th indicator is the percentage of stocks above the 50-day EMA. And as you can see on this chart, you get more moves above and below the 50-day EMA than you do of the 200-day EMA. And so for that reason, I put a much wider threshold for my bullish and bearish signals. But basically, when this indicator is above 80% and you have more than 80% of stocks above the 50-day EMA, that shows exceptional strength, and that is bullish. But if you get a move where this goes below 20% and you basically have more than 80% of stocks in the S&P 500 below the 50-day EMA, that is a signal that something is amiss. And that happened in late February. So that concludes this edition of Next Level Charting. Again, I'm Arthur Hill with trendinvestorpro.com. If you're watching this on YouTube and you like this video, please give us a thumbs up. Thanks very much for tuning in and have a great day.